Good afternoon, Maverick traders. Welcome to another Thursday. It's Cinco de Mayo. Check that out. Hopefully, you guys are going to have some good plans for this weekend and celebrate the spring. Looks like the markets have been on spring break over the last couple of days, as they're about as consistent as my 14-year-old niece. Let's get into our market analysis real quick, guys. I'm going to give you my 2 cents. It's just my 2 cents. Take it for what it is. Take responsibility for the outcome. You guys get the drill. Let's go into the market analysis. Here's the fun part about this. Yeah, super volatile. And the big move was, I believe, yesterday. Yesterday was very intriguing. We got what the Fed was going to do. Came out, did exactly what they said. Powell comes out, still hawkish, still ominous, saying, hey, we got to put the gas pedal down. He didn't put it down as hard as we thought. A 75 basis point raise would have been too much, but he's looking to do another quarter very quick. In fact, hinting towards another half, a full half, next meeting. So nothing really good out there. But it came out, and the markets just loved it. It just took off. And I was kind of giggling to myself. I'm like, is this just a panic to the exit? There might have been a lot of traders expecting a 75 basis point raise, thinking the markets would collapse, and maybe just a bunch of shorts abandoning the markets. However, we flip-flop over to the next day, and we get the exact opposite. Take a look at the returns here. Dow, the S&P and the Nasdaq down considerably. The Nasdaq down about 5%, which I thought was pretty big. However, if you take a look at the charts, you take a look at the percentages, and this is a fun one that I thought was great building this. I had to double check it. But the S&P and the diamonds are still up for the week since Monday. So even with 1,000 points down on the Dow, it's still managing to hold on to a slight gain. I think it's 0.75%, somewhere right around there, or just shy, I should say, of half. Sorry, but it's still a gain. Taking a look at that heat map. So push-pull at the Fed after Fed announcement. It was interesting because it was like the markets were almost inflating one of those airbags, knowing that it's going to fall off the building the next day. And boy, we sure did. Taking a look at that heat map, we'll get there in a second. Everything was down. This is what throws me off, though. It sucks because that 420 mark is still in play. It hit the 430, which was something that we thought it was going to retrace to come Monday, Tuesday, and into Wednesday. Folks, if you take half of Wednesday out, we don't get anywhere near 430. We were hovering barely below the 420 mark before that Fed decision came out. So this would have been a low base breakdown, and it would have been a really good one. If the majority of today's candles started at 410 and finished at 400, we got ourselves a low base breakdown, and that's kind of what I wanted to see. We could see capitulation, we could see the VIX spike, so on and so forth. We did get a climb in the VIX, but it was not a spike. So the last couple of days didn't do anything for us. I think it just freaked the crap out of all the bulls, and then it freaked the crap out of all the bears, but not in that order, right? It just took everybody out who was bearish, and now just wiped anybody out that just bought. So very fun how these markets are just set up to really stick it in your nose. The Qs here look a little bit better when it comes to a bearish confirmation or breakdown. The volume was significantly higher than the previous day. If you remember the SPY, it was a little lower. So the most of the activity of the selling, or the pressure I should say, was definitely in the Qs. Take a look at this heat map that completely agrees. Most of the time we see these Apple, Microsoft, Googles, Amazon, Teslas, they're kind of hanging in there. Not today. These things just gave up the ghosts. A lot of them had experienced a nice bounce before today, so they had a lot to give back. But once again, it's this push-pull. Nothing's really gained or lost anything. It just gained a whole bunch and then gave it all back. I mean, within 24 hours, folks, not even 48 hours, that these markets have experienced 20% move, right? Well, maybe not that. 8%, 10%, crazy. Here's the VIX. Now, I don't show this often, but I wanted to show it here because you can see the spike that we had at the beginning of March. That was a substantial little pop, and that had some fear behind it. Today was really going to be another spike. Once again, if you take into consideration yesterday's candle, if that just finished flat, and this candle, today's candle, started at 28, we'd be up at the 34, 35 range. But it didn't. Yesterday's move drug everything down, and it's gone up from there. What does that mean? Well, it means that we can't get anything out of the last couple of days. Super hard to really get anything concrete to make a huge decision on. However, I'll go ahead and let's get to my market outlook. I would not be surprised at all if it doesn't pop right back up to the 430 resistance mark on the SPY, or it just dojis. something inside, somewhere right around that front 420. So gap higher that doesn't go anywhere, or a gap higher that actually retests the 430 and comes back down. But to sit there and park it over the weekend would be something that I would expect. Now, I'm still basing this on the chart. Lower lows, lower highs, descending, moving averages, call it what you will. If we, once again, I'll say it again, if I could just get rid of yesterday, this is right in line with what I've been looking for the last 3 weeks. Bear trades that I've seen, bear trades that I've looked at, they're still really good. In fact, we got a couple to look at. They did get a little bit wish-washed because of yesterday's action, but they're still technically in line. So let's get to some trades because they're actually kind of interesting. I don't have very many, folks, but I did bring 2 over from last week. Coca-Cola was one, and KDP as a sideways trade. This survived its earnings. I thought was really actually pretty interesting. Staying sideways for any of you guys that like to do condors or any sort of sideways trade. So let's get into Coca-Cola. And it moved substantially lower along with everything else, but it hung in really well today. It was one of the staple stocks out there that have really been just not messed with. I don't want to say that there's great news behind it and it's the greatest thing to buy. No one's interested in selling it. They're too busy just stepping on the throats of Amazon and Tesla, and it's the stay-at-homes, right? So if it stays above that 64 mark, boy, if it stays above the pivot on the 50 here, right around the 62.5, 63, I'm fine with this. It's kind of funny where you could actually go back to the old school days, the 50s, and start buying Coca-Cola and GE and holding on, and it's actually kind of looking pretty decent over the last little bit. So let's move to KDP. This is a sideways stock I thought was interesting. 4 or 5 days ago, I think it was the end of April, it actually had its earnings. We were discussing this on the Wednesday class, saying, oh, you could brand if it breaks out or if it breaks down. We like to play earnings plays. Racial spreads are fun. Targeted butterflies are fun as well. But for anybody who wants to condor it, they would have done really, really well because you could have gotten a pretty good credit on both sides of this as the volatility was up super high before its earnings, and it didn't go anywhere. It stayed above that 36.5 mark. And boy, over the last 3 days, it doesn't. If you were to take a look at this stock, you would expect the markets to do even half of what they did over the last few days. Here is Snap. Now this one is starting to roll over. I like to slow play some of these. A lot of the other ones are a lot further down, and it's kind of hard to chase those or try to catch that falling knife. But since I don't believe the markets have capitulated yet or really seen too much pain at all, I think this thing will roll over along with them. So it's still on my bear watch. Hasn't triggered. My trigger on this is going to be below that this low here. Maybe it's 26, right around the 26 mark. Goldman Sachs. We should really start looking into the financials now and start picking on them. If rates are just going to go higher and we've got a consumer that's starting to tighten up, then there's no reason why we can't exploit that. So keep an eye on this. Hasn't really triggered. I want to see something below about the 305 mark, something a little bit low. If I get a good candle tomorrow, I might look into jumping into this because I truly believe the markets have some more to give up to the downside. And the one I really like, this one actually almost triggered today. You can see it retraced. It was off of its bottom. Didn't quite. I'd like to see it stay below that 117 area, but it's really good. It's in retail, consumer. It's probably not going to make it if the markets don't, right? So anyways, it's a small watch list today, folks, but the main thing I wanted to leave you with today going into it is a holiday, right? I wish it was Friday for heck's sakes, but I just don't see it going much. We might get a gap up and just park it there. Or we might flush down and then come climb back. I've seen that before. I don't think the head faking is over is what I'm trying to say before we get into Monday. So it was right in line with expectations. The push-pull place is a slightly lower net, right, from the first 2 days, but all 3 majors are still holding on to small gains. You might want to double check me on the Qs. It might have given up that, but I can't believe that there's still gains in it for the week. Prices and inflation are high. Jobless claims up slightly, but it was from a record low, so let's not look too deep into that. The big news was what came out of Powell's mouth. What the Fed's going to do is really going to be the driver of these markets and what happens with prices and the consumer through the summer. We'll see if we can keep the spending up unless we get a little bit more relief. Supply chain worries out of China. I don't know if you guys have been following some of that. They had a COVID outbreak, got a little bit of a bottleneck when it comes to their exports. And based on our price index numbers, did you guys see that over 100 billion for the first time ever? We depend a lot on their stuff. Kind of pathetic. All right, guys, earnings reports, not too much. Got VRTX, Cube or Square, whatever that one is, then Monster. It's winding down. Once again, I don't think it's going to be too specific to the overall sector. It's going to be to the stock. But that's all I got for you guys. Hopefully you can have a drink and try to absorb the last couple of days because it really didn't give us much. And we will see you guys next time. Bye, everyone.